Hello, it's Brian Shannon from AlphaTrends.net. Today is Wednesday, the 29th of October, 2008, and we had more volatility once again. Federal Reserve cut their interest rates by 50 basis points, and the market finished, the S&P 500 finished with a loss of 43 cents, or about a half a percent. But really, the story in here was big volatility once again. This morning, the market was a little bit stronger than I think most people expected it to be, and then late in the day, we had a push after that initial volatility from the Federal Reserve when they made their policy announcement here at 2:15 Eastern. The market sold off, recovered, held along that VWAP, and then made a nice push in here. I had suggested at about this point that it looked like maybe we were going to get an afternoon push higher, and then I'd suggested here that you wanted to be careful because the market was selling off on larger volume, and that was more notable actually on the Qs. We'll take a look at that shortly. As far as the 10-minute time frame goes, the S&P 500, is undamaged based on the positive session we saw yesterday. That this previous level where we gapped down to, that was I guess last Wednesday we gapped down to there. That level did hold a support even on a closing basis, so that's one positive to take away. Also, we have a rising 5-day moving average, but what we saw here was the huge volume really came in right at the end of the day with some more liquidation. So you have to continue to be very aware that we remain in a primary downtrend, and the bear markets are defined by much higher volatility than you would see in a bull market. And when you're trading the counter trend rallies, which is all this is so far still, we've still got this pattern here in the daily time frame of the lower highs. So far we've still got a clear downtrend, and that's not going to change for quite a while. So you have to be quick to lock these gains in. A lot of people's confidence moves in direct proportion to the underlying stock or whatever it is they're trading, when it should be the opposite, particularly if you're trading long in a downtrending market. That is to say that as the market goes higher, your defense has to become stronger and stronger. Don't let your guard down and become complacent. So here in the 5-minute time frame, we can see that this level is going to be important tomorrow, about 92.70 or so. I don't think it would be a horrible thing to see the market drift down towards that 5-day moving average, and hopefully the buyers will emerge in there again over the next several days. And right now, I think the more important level for something to build off of to become more than just a couple days rally will be about $90 a share, and that level will move higher as hopefully, let's say this is where we close today, let's say this is the final bar, maybe we could do something like this tomorrow, rally up on the open, sell off, scare people, and then come down towards that 5-day moving average, and then something like this, and then let's say the 5-day moving average looks kind of similar to that. We'll see, but right now you have to be very careful. Let's see if we get these lower highs and lower lows here on the short-term time frame, and then look for the buyers to come back in, rebuild their positions, and hopefully retake control once again for hopefully more than a couple days. The rally failed today here on the S&P 500 right at this downtrend line from the mid to late September highs, which were right here. So this trend line is apparently getting some attention from people who are looking at it. So we have to be aware of that. Also, this area up here is our next potential level of larger resistance up near 99. So I think we need to see some pullback, hopefully down towards about 90 or so. Then this market can rebuild and hopefully be able to push higher. Now, I've been talking about gold more than I used to, but I'm not going to talk about gold every day. My opinion remains unchanged, which is that this market is in a downtrend. It's lower highs and lower lows. We've got a declining 10-week, 20-week, 30-week, and 40-week moving average. That means the long-term trend is down in gold, and if all you have to do is take a look at the direction of the highs and lows. They're lower highs and lower lows. This rally is, this little short-term rally may continue higher. We've got a rising 5-day moving average. I find it unlikely that it would be able to rally much up beyond about $80 or near that 50-day moving average. I think that long is a dangerous game in gold because it looks like the sellers are gaining momentum in here. Let's take a look at oil. Oil was up $2.57 on the USO, or 4.8% today. It it broke above that 5-day moving average in here today, and let's take a look at it here on the 30-minute time frame. Here we've got this 5-day moving average in here, and you can see that it broke past these, it broke this little pattern of lower highs and lower lows. So we've got, maybe a little bit of a rally coming here for a few more days in oil. And again, I think that 5-day moving average will be important. It's interesting to see all these markets rallying together, by the way, rather than, it's supposed to be that oil rallies and the equities decline, but that relationship obviously hasn't held true this year, which is why you have to trade what you see rather than some relationship that's supposed to be there. So oil, 54. If you're trying to pick a bottom in oil and you're long in here, I think if it breaks back below 54, then there could be trouble. But there's a little bit heavier volume in here today, but clearly we're still in a downtrend, and I don't see really any reason to be long oil. The Russell 2000 rallied today about 0.5%, so on a closing basis, this market was a little bit stronger than the other ones, and you can see in here on the 30-minute time frame, we still got to change the number of days to get rid of that data back there. But this is a trend line that I drawn in yesterday, saying that this represented the essence of the trend, and you can see here that we broke above it, but then closed basically right on or just below that trend line again. So trend line breaks don't mean they're going to reverse. I know I've said that a couple times the last couple days, but I want to emphasize that it just means the rate of descent has slowed, and markets correct two different ways. They correct through price, they correct through time. There's nothing that says that after the magnitude of drop that we've seen that we have to rally. We can go sideways. Hopefully, it'll make all of our lives a little bit easier to trade the long side for the rest of the year if this market can rebuild, but the market doesn't care what we think, so we have to listen objectively to what price action is saying. The 5-day moving average kind of lines up with this little peak that was prior resistance in here. That's at about 47.5, so hopefully, let's see if that can hold here and potentially build the case for a continuation of what started on I guess Tuesday. Today's Wednesday. The financials were up for a good portion of the day, but in the last couple minutes here, you can see that we had that last hour of volatility. Once again, you got to really remain on your toes. This market sold off more than $1, and percentage-wise, that's about 6-7%. So it sold off more than $1 here in the last about 15 minutes or so. So when these lows get taken out, you've got to be really paying attention and protecting your assets. Here's approximately where the important level ought to be for this market, 14 to 14.25 or so. Still, it's a broken market. There's no reason to be trading this on the long side. The semiconductors, I pointed out yesterday that they were a stronger looking group, and here on the 30-minute time frame, here's where they gotten past that resistance yesterday at about $19.10 a share. I don't think you need to look at it so literally. I mean, if these markets break down below that 1910 and maybe they can get caught by the now rising 5-day moving average, then maybe it can build towards something a little bit more significant. But you've got to really remain on the defensive in all these markets. That's the main theme here, is that these powerful rallies we've seen dozens of them this year, and they get everybody's hopes up that was it, that was the worst of it. But then you find a week, 2 weeks later that people are selling those positions. Don't just listen to the message of the market and set your stops based on the levels that you're comfortable with. Here in the semiconductors, same thing. It was last 15 minutes of the day that really saw the selling in there. And for the Nasdaq, it was down 8 cents. And I'd put a couple warnings basically. I'd put one warning at about right here saying be careful. Federal Reserve is coming up. you want to lock in your gains. Then right around here, I said it looked like maybe dull market in here. It's holding on to the gains pretty good. There, maybe we could see an afternoon rally. It broke past this little, you could call that a little inverted head and shoulders on the 1 minute time frame, pushed very nicely higher in here. But my reason for concern was that the volume was very large, and you can see that on the chart I posted on the blog. This later day volume really kind of dwarfed it though, but the volume as it pulled back was very strong, and I said this level would be important for the remainder of the day. Even though there was about 20-30 minutes left, that was the level that would remain important. The market made a lower high and then just got smushed into the close. So here, let's back it up a little bit to the daily time frame. You can see we've still, we made it up to the declining 20-day moving average. The 10, 20, 50, 200, they're all declining, which still means guilty till proven innocent. These rallies are great when you can catch them, but as I've pointed out, I think they're only day trade rallies. I'm going to miss out on part of the moves, and one day I'm going to miss catching the bottom, but it's not my goal to catch the bottom. This is the trend line that we've been observing earlier, and that's where I had said, basically you wanted at this point to be careful because it had come up to this trend line here on the 30-minute time frame, and that had the potential to be resistance. It's not a reason to sell, but it's a reason to raise your stops and be a little bit more careful, and then listen to the message of the market so that you can lock in any gains that you have, or just become more defensive. This looks like probably down towards about I'd say basically 30 to 30 and a half. That level is going to be most important for this market to hold the next couple days. We had that slight lower high in here. We've still got 31.50. If that fails to hold, then I think down towards $30 a share. But we remain in a downtrend, and these picking bottoms is just not an easy job.